Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everyone, welcome back to an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I am your host, Mike Leon. Brian here is a seasoned tax attorney based out in Tampa, Florida, and the founder of Tampa Tax Relief. And for more than 25 years, he's been helping individuals and business owners all across the country resolve serious IRS problems, from audits to tax debt to even cases in the U.S. tax court. Today's episode, we're going to be talking about when the IRS believes that a tax problem has actually crossed that line into fraud or evasion. Brian's going to explain what it means, how these cases kind of start, and what you should do if you are worried about criminal exposure. Brian, it's good to see you. As always, that last part's a little sinister there on the criminal exposure part. So let's talk for the audience here. Kind of explain, what is tax fraud, tax evasion? What does it really mean?
Thanks, Mike. Really, when people look at criminal charges related to taxes, it really takes, I think, two different directions to get there. One is, in and of itself, criminal fraud on tax, and that's usually primarily failing to disclose income, and that's the number one criminal matter from a straight tax standpoint, and that could be, quote unquote, the average person who just simply files a false return and doesn't declare the income, regardless of the taxability of it. But that is not something that is an everyday, every occasion type criminal case. It's usually a pretty egregious situation involving either a great deal of money, usually well into seven figures or high six figures, or maybe somebody that's kind of gone down that road a few times and escaped criminal charges, and then finally at some point the IRS and the federal government says, okay, enough's enough, we're going to go ahead and file criminal charges. And that's it, primarily, as I say, failing to disclose income. The other side, the other part of criminal tax cases is generally where there's some other type of underlying criminal activity involved, such as drug dealing or kidnapping or terrorism or counterfeiting or some other type of criminal activity that in and of itself would easily bring criminal charges. So oftentimes, if there's a lot of money related to it and the government can prove that there's a lot of money related to it, most criminals don't declare criminal proceeds on their tax returns, although actually you can just put it as other income. So they'll oftentimes add a count of failing to disclose income, kind of going back to the first part, as part of a criminal case. So really, those are the two areas that people should be aware of.
Brian, let me ask you, outside of obviously criminal charges like kidnapping and things like that could have, a tax evasion added to it, like what kind of typical behaviors can make the IRS see the tax problem as criminal instead of something that's civil?
Well, I think really it's the dollar amount. And again, for somebody going through it the first time, if you're talking seven figures, eight figures, large transactions that don't get disclosed on their returns as income, really that's probably the number one thing. But also too, you have people that are kind of poking the bear, and they might come in at a much lower dollar amount, but it just seems like they're doing it over and over again. And at some point there will be a referral made to the area of the IRS is called criminal investigations that will actually involve themselves in looking at it.
Brian, I've asked you this in previous episodes. Some people are not good at math, right? They make errors when they're doing their taxes, entering it into TurboTax or whatever. Is there a difference between simply not being able to maybe pay your taxes versus actually committing fraud? Where's that difference?
Well, I mean, the IRS could look at it and say, listen, you didn't disclose this income, so you would not make yourself liable or subject to this tax assessment. So therefore, you're not paying it is in and of itself enough of a basis for us to come forward on some type of criminal charge. But generally speaking, if people leave some income off or they claim deductions that are completely disallowed, I mean, there's over 200 million tax returns filed every year. I mean, the IRS takes a dim view of it, but the way that they sanction people isn't always necessarily criminal charges. It's usually through the form of some type of penalty, financial penalty, and then obviously interest on top of it. One of the things that I see quite often are these notices where somebody does leave income off their return, and it could be anything from maybe $500 to far in excess of that. And the IRS will oftentimes just send out a computer-generated letter saying, listen, we think you left this income off, and if you don't disagree, we're going to add it to your tax return and put a penalty on it and interest and sign here, and we'll be about our business. And if it's an honest mistake, um, you're subject to the penalties and interest and, of course, the additional tax, but the IRS isn't going to come, bring criminal charges against somebody over a situation like that. They just don't do that.
Well, let me ask you on that. So stay with that about, let's say, red flags. Like, what are some red flags that could trigger somebody that a case is going to move into criminal territory? At least it's heading there.
Sometimes I'll get started on a case and I'm working with a revenue officer, a collections officer, and then the case gets kind of real quiet and it seems like it's a little bit unusual. And again, a lot of times we're talking tax liabilities of 6 figures or 7 figures. And all of a sudden, I'll get approached by somebody from the CI, Criminal Investigations Division. So a lot of times when there's a real lull in the action, if you will, on the large cases, that sometimes is a flag. But really, I talk to my clients and I say, well, tell me what your situation is. Tell me, where's the income, what type of industry or business were you in? Was this some type of a gift income, capital gains, whatever? And I can kind of get a feel for it on the front end. But again, them opening up an investigation doesn't necessarily mean that formal criminal charges are going to get filed. It just means that they're investigating with the criminal division.
So can I kind of ask you on the criminal tax case, like, how does the IRS start building that case? Like, what are some things that you've mentioned some of the things, but what are they actually looking for?
Well, one of the things they're going to be looking for, or looking at, I should say, are bank records. And that's probably the absolute blueprint or roadmap that the IRS uses is bank records. And, more and more people are not using cash. In fact, you go to certain sporting events and they're cashless, or certain concerts and things like that, large events, they're cashless. In fact, if you know anybody under the age of probably 30 or 25, if you want to give them a $100 gift for graduation, they'll ask you if you can send it by Venmo or PayPal or something. I mean, they don't want cash. And that's a huge advantage to the IRS because people use banks, and for the most part, they have to use banks. And so they'll gather bank records, and not just bank records, but things like Venmo, PayPal, Cash App, those type of things. They'll gather that information up at the beginning of an investigation, and they'll read through it, and then they'll reach out and say, hey, we want to talk to you about this. Tell us what your story is. Well, they've already pretty much got most of what they're going to need in terms of the actual hard proof of where the money's coming in, going out, and so forth. So they have a bit of an advantage at the start, but again, they come in very quietly. They don't make a lot of noise. It's not like a criminal case involving a situation where a violent person or somebody involved in heavy drug dealing or something where you can just tell there's going to be something coming quickly. With the IRS, when they do criminal investigations, it's usually a very quiet approach. As I like to tell people, they're criminal investigation units, basically accountants with guns. And that's really what they are. They carry guns and they're accountants, and they're good at what they do.
It's kind of like the Ben Affleck movie, right, Brian? But let me ask you, just as a point of reference for somebody that's watching this, IRS opens the criminal investigation. Explain how it's different from just like a regular run-of-the-mill audit or some type of debt collection case.
Well, for starters, again, if you have field officers, what they call revenue officers, the collections officers, or for that matter, even a revenue agent, which is essentially an accountant or auditor, if they back off the case a little bit, and you can kind of tell just from a lot of the circumstances going on, the next contact you'll usually get is from somebody from criminal investigations. Now, that's not to say that criminal investigations always comes in after a revenue officer or revenue agent's been working a case. Sometimes they'll come in very quickly. And one of the areas that I see that and have had a lot of experience in are tax return preparers, paid preparers that people go to that are making up numbers on these returns and generally providing much larger refunds to their clients than what the clients are entitled to. And those are cases where criminal investigations will just kind of come in on their own on the front end. And I've had my share of cases where people call me and say, hey, I'm an accountant. I came into work today and criminal investigations was here, and they took my they had a warrant. They took my computer and some records and so forth. And I think I need help. So when it comes to something like that, it's very quick. And when I say quick, it's quick to the accountant or the person preparing the returns. It's not quick on their end, because they do spend quite a bit of time investigating and looking at records. And I mean, it's all a paper push, and it's all electronic for the most part. And so they're very prepared coming into it. So when they get started on something like that, they've already pretty much got most of what they need. It's just a question of how far it's going to go with the person they're after.
Brian, let me ask you you mentioned a little bit on the penalties front, but can you kind of soup to nuts, like what are the penalties people are facing out when it actually ends up in criminal investigation potentially?
Well, I mean, you can have a fraud penalty that's equal to 80% of the unpaid tax. So simple math, if the unpaid tax is, say, 100,000, there's an $80,000 penalty right out of the gate. And then, of course, they charge interest on the penalty, and it's compound interest. So you can have a criminal tax liability pretty much, depending how old it is, almost double of the actual underlying tax very quickly. So the IRS uses financial penalties as a big hammer against people, because people call, not just with criminal cases but in other cases, and they say, my gosh, I got this big tax bill, but so much of it's penalty. And I say, well, there's a reason why they charge a penalty. They want to discourage certain type of activity. But in the criminal area, as I say, it can go up to 80% of the unpaid tax right out of the gate, right at the start. And so that's a pretty heavy financial burden for anybody facing criminal investigations.
Brian, this may be a Captain Obvious question, but I'm curious because a lot of the times, if you cooperate with law enforcement, for lack of a better term, you get a little leniency. So can working with someone like yourself, a tax attorney, early on, sometimes prevent the case from becoming criminal?
Well, that's what I tell people when they first call me. I'll say, assuming that when they call me, there's no formal charges filed, and it's very rare that that happens, that somebody says charges are already filed. They'll say they were approached by criminal investigations, or their accountant was approached by criminal investigations. And I say, really, my goal getting you through this matter first and foremost is to avoid any formal criminal charges getting filed. So if we can do that, that's a big win in and of itself. But again, these criminal investigators are very good. They're not perfect. Nobody's perfect, but they know what they're doing, and they take the time they need on the front end. And when you're talking bank records and credit card statements and deeds to land, titles to vehicles and so forth, you're talking more along the lines of kind of a white collar type situation. And so they have a lot of ammunition before they really kind of throw themselves into the case and approach the taxpayer. And so if we can avoid criminal charges getting filed, that's a huge win. And I will tell you, for all the cases I've worked with CI, I mean, I have yet to see a situation where they've got a completely innocent guy just walking down the street who gets rolled up in something like this. Now, that doesn't mean everybody who's approached is guilty. Doesn't mean they're going to face any type of criminal charges, but they don't just spend their time kind of throwing a dart at a map and hoping they get somebody. They have reason to believe something's taken place. And again, when you have the wealth of records that the IRS can gather, they have a huge head start. People say, well, can they get my bank records? I say, well, yeah, they certainly can, because if the banks don't turn over the records to the IRS, they lose their bank charter, and that means they're out of business. And I say, hate to tell you, but I don't think I don't want to name a bank, but I don't think a big bank is going to lose their bank charter over your situation. I mean, they're going to turn over those bank records. And the way it is now, with so many people not using cash, there's just the IRS has a lot of information going into a case.
Yep, that's very true. So, Brian, as we kind of land the plane here on the episode, someone's listening to this, they're a little worried right now after hearing you speak that their tax problem has crossed the line into criminal. What's the most important step they should take right now?
Give a call. One thing I didn't mention earlier is that prior to doing tax full time, I was a criminal defense attorney. So I have experience that maybe a lot of tax lawyers don't have, and that's actually having represented literally hundreds of people in the criminal courts for a dozen years. So I have an understanding of how law enforcement approaches things. I did my share of white collar cases, and kind of have a better feel, I think, than most tax attorneys for what to expect and kind of know what's going to happen as the case progresses. So that's something that I tell people when they call. I say, listen, I have that experience, and it definitely plays a role in how I approach the case and how I can be able to help people. But just give a call to our office. We offer a free consultation, and we'll talk to you about your situation. And if it's something that we can assist you with, we'll let you know.
Great info as always. Brian, thank you for the time and breaking this down for the audience. I appreciate it.
Okay, thank you, Mike.
And thank you to everyone out there for joining me on this installment of the IRS Debt and Audit Podcast. If you are worried right now that your tax problem is crossing that line and can be viewed as fraud or even tax evasion, don't wait until the IRS has already built that case against you. Do me a favor right now. Visit tampataxrelief.com or call 813-694-7177 to schedule that consultation with Brian and his team. One more favor as you head out the door: like, subscribe, leave a review, comment, share the episode with someone who needs to hear it. I'm Mike Leon. We'll see everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.